you said something about mortgage insurance, and for somebody that doesn't know what that is, could you
Sure.
explain that just a little bit?
Sure.
Like maybe
Anytime,
dive into
anytime you don't put 20% down, you do have mortgage insurance.
Okay.
Sometimes if your credit score is higher, it's really not much. It can be as little as, $20, $25. Lower loan amounts with higher credit scores, it's really next to nothing. Having two borrowers instead of one can lower mortgage insurance rates because there's that additional layer of security of less chance of default. But FHA employs mortgage insurance in the form of what they call a one-time, where they finance 1.75% on top of the loan.
Okay.
And then they have a 0.55, which is an annual factor. You divide that by 12, and that's the monthly mortgage insurance. So they have a one-time finance and a monthly, but allows you pretty flexible guidelines on FHA. You could probably qualify more in an FHA than you could with a conventional, and certainly more than a USDA, because USDA is very strict on their ratios.
Okay.
But VA...
So it's kind of the way that the lender can protect themselves.
Yes.
Okay.
Yeah.
By the buyer not being able to put at least 20%.
Correct.
Okay.
Yeah.
Got it.
So, and then they have the tiered process. So you can put as little as 3% down. You're going to have high mortgage insurance with 3% down on conventional.
Okay.
Then you have 5, 10, and 20. Okay, 20 eliminates it.
Sure.
So you've got these different buckets of risk, and of course, the lower the risk, the lower the MI payments. Okay?
Got it.
And that's kind of how the MI situation works.
So with the mortgage insurance, is that something that ever goes away for the life of the loan? If you have, let's say, the equity goes up, or how does that work? I mean, is it something that's always going to be part of
Well,
the loan?
the way the MI works in a conventional world is that, once you have demonstrated equity greater than 80%, okay, in other words, you own 80 or 20% or more of the house, then they can reassess and probably do an appraisal on your property. You just call your loan servicer, ask them to, remove the mortgage insurance.
Nice.
They'll tell you the steps to follow.
Okay.
And
that's something that the
that
homeowner needs to kind of take upon themselves.
Exactly.
Gotcha.
And if they're not sure, call their lender, or they can call me.
Okay.
And we can talk about, what are the opportunities.
Nice.
Most mortgage insurance companies want you to stay in there for a period of time before they're just going to roll over and say, yeah, sure, you can get rid of it.
Okay.
But I think that each lender has probably different contracts and requirements with the mortgage insurance companies, so it's really a case-to-case thing.
Gotcha.